A very warm welcome to all investors gathered here today. We are live with Future Trend Power Series with our CEO and founder Dr. Mohit Batra and Chief Investment Officer Mr. Sunil Damania. Today's event would be understanding on 4 key trends. Without giving away much, I'd like to hand it over to Mr. Sunil.
Yeah, thanks a lot, Jason, and warm welcome, Mohit.
Very warm welcome, very good evening to all of you.
So, four insights, a very interesting one. I'm going to look about the macro, how you and me are going to look at the future trend in terms of economy. How do we see it's a time for appraisal, and if that is so, what is the general public, आम आदमी सोचता है अपनी income के बारे में. And third thing which I picked up is that how people moved is to spend money on non-essential items, because essential items तो हर एक आदमी को लेना पड़ता है because it's a part of a shopping basket. But what is the trend that has been basically, of course this trend I am not captured by me, it's been captured by Reserve Bank of India, and I'm going to basically present that. That's one. Second thing, I was looking at some interesting data point about what is the population of India, how many people has unique financial identity, either with banks, with insurance and so on and so forth. Within that, how many people have a PAN account, within that, how many people have a demat and so on and so forth. I'm trying to understand what is the penetration of the financial asset as an assets class, number one. Number two, what could be the future growth for equity as an assets class. Number three, how FMCG companies are performing over the years vis-a-vis the GDP. And number four, I'm going to talk about the IT companies. The one big pain point for them has been the attrition rate. Has it come down? If yes, how much has come down? Has it gone back to the level that we have seen in 2021 or not? So this is the four trend I'm going to run. Then there, of course, there is a positive and negative trend also that we are seeing that. And then, of course, we'll cover some major news of the week, and then we'll open the floor for question answer. But before I begin this webinar, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be considered as an indicator for future returns. If you decide to buy and sell, please consult your financial advisor before doing any action on buying and selling. With this, let me begin very briefly. What are the four trends that I'm going to discuss? I did mention future expectation of future economic situation, equity penetration versus the PAN card holders. FMCG, is it really fast moving? The FMCG stands for fast moving consumer goods. Does it deserve to have that tag as a fast moving? And we are going to look at the trend just to make a sense of that. And the fourth one has been about the trend in the attrition in the IT companies. As usual, my laptop does create some unique problem for me every now and then. I think it's back in, okay, good. So let's look at it, the first one, the future expectation from the economic surgery. I must tell you, this data all been sourced from Reserve Bank of India. And Reserve Bank of India does do this kind of an analysis. Now, when the question was asked to the sample by the Reserve Bank of India to the Aam Aadmi like you and me, and they do keep doing this survey every alternate months kind of a stuff. So what I've done, I've looked at the trend from survey from March 2022, May, July, this, and last one they conducted in the March 2023. Now the question was that will economic situation will improve or not? And that day what they asked. It was 50.2 on January 2023, that came down to 49.9. I'm not going to discuss what will remain same because that's what RBI captures, but what is will it worsen? So while the people, those who believe will improve, the ratio has come down. It came down below 50, 49.9, okay, from 50.2, but will it worsen? That increase from 33.2 to 35, and due to that net response, what is the net response? What RBI says, positive versus negative, that decreased from 17 to 15. So on one hand, it's not very happy scenario, and reason could be very obvious, different reasons why they don't. The Aam Aadmi doesn't believe that economic situation is going to improve in coming year or not. This for next 1 year. That's what they ask questions on. And that's on the economic situation. Now let's try to understand their own income level. Are they extremely buoyant about their income level or not? The answer is yes, but it's slightly dipped. More than 50% do believe that income will go up in next 1 year, but it come down marginally from 54.5 to 54.1. 0.4 percentage point difference is there. But will decrease, that also increase from 6.9 to 7.5. And due to that, the net response has come down from 47.6 to 46.7. So in both the cases, economic scenario and the net income, the mood has gone little soft. It's not a question of worrisome as such, it's just that it has gone little soft. But now when you're concerned about the economic activity, when you're concerned about your income, obviously the next correlation should be, are you going to spend money on your non-essential items? And that's where some trend has emerged, which is a little contrary to the what. So people, despite they are not so much robust about thinking about their economic activity or trend going little soft on the income level, but they're willing to spend more on the non-essential items. The reason I want to focus on word non-essential items, because which you could avoid, you can postpone those items, am I right? Because it's not essential. And what I observe is that they are expecting, the more people have said that from 31.9, which was done in January, 34.5 people are saying they are going to spend more money on the non-essential items. And at the same time, 29.8 people were thought in January 2000 they are going to spend less. That number further came down to 28.8. So in other words, it's a very good sign. And if you look at this trend from May 2022, it has been on a constant or increase kind of a stuff, except some minor dip that we saw in Jan. So I think people are willing to spend on non-essential items. Now, my sense is that today the world is moving on something which is, you can do away with it, but they want to spend more on a travel and leisure. I think that's one expense that's gone up. Your money on the OTT and other things have gone up. Your net and other expenses have gone up, which are essentially not essential. You could actually live without them, and yet people are willing to spend on that kind of stuff. So that may be the reason why it says that people are going to spend more in next 12 months on the non-essential items. So please look out for those companies which are selling non-essential items. Probability is very high that they might see a better top line and bottom line going forward. I must tell you that each and every company going forward is going to see expansion in their margin. Why am I saying so with so much confidence? Because the input cost pressure have completely abated. And in fact, if I must have gone to almost 150, 200 companies con call in last 30-35 days. Not a single company has said कि हमारा input cost कम नहीं हुआ है. Everyone has been saying that our input cost has come down, and the what is another heartening thing is that people don't expect that input cost to move up, and I think that's one reason I do believe that margin has a great scope for an improvement. So that's on the economy scenario, income, and the non-essential spending. Let me come to the second item. What is the population of India? So let me go very quickly on the penetration equity market, and very interesting data. So total 140 crore population of India, out of which 110 crore people do have a unique financial accounts, and lot of credit should go to the JAM, Jan Dhan, Aadhaar, and the mobile, where government of India wanted people to open a Jan Dhan account, and lot of people because of that came into the financial mainstream, finance mainstream, because they could open the accounts and they come in the official channel of this one. So 110 crore people do have now one way or another way any financial accounts. If you would have asked me 5 years back, it would be near about 60-70 crore, not more than that. So that number has definitely increased. And due to that, if you look at the number of people having a PAN account, is near about 61 crore. 140 crore में से सिर्फ 61 crore के पास PAN account है, which is less than a half. Within that, if you look at the PAN, the Demat accounts, it's only 11.4 crore. Look at the the numbers. Look at as the funnel becomes more and more narrow, the more and more drastic drop that we are seeing. 140 become 110, 110 become 60.8, and 60.8 becoming 11.4. And then if you look at the active investors like you and me in the market, it's only 2.3 crore, 3.3 crore as on March 2020. The reason I'm trying to give this data, I'm not looking at the population of India, 140 crore, because that will be too optimistic for me. But even if the Indian PAN account, which is a 61 crore, there is a high probability these numbers will eventually move to this. First it will move here and then it will move here. So I think we have a huge runway in terms of numbers. And if you look at my trend, which I've been showing week after week, there's a one common trend that's emerging, whether it's a mutual fund to GDP ratio and a number of SIP and so on and so forth. I think somewhere people are moving more towards the financial saving as an avenue. And as we go forward, Indian always has loved a lot of physical assets, whether it was a land, whether it's a gold and so on and so forth. I think there's a constant shift that is going to happen between physical assets to the financial assets. And maybe going forward, I will, in one of my webinar on this topic, we will talk about what has been a trend happening from moving from physical assets. People are moving toward financial assets, and that's going to bring in a lot of wealth creation story for investors like you and me. Now coming to the very basic and FMCG companies, and what has really come as a surprise to me is that they are supposed to be, FMCG stands for fast moving consumer goods, am I right? And this is the data I have looked at. I've looked at the nominal GDP growth versus the top line growth of India's leading FMCG companies like Hindustan Unilever, ITC without cigarettes, that is only FMCG business, Britannia, and so on and so forth. And look at this. So this data may not give you much idea. So what I did actually, I look at compare the sales growth of this company versus the nominal GDP. And what you see in the green gives an idea that which one grew faster. What has come as a big surprise to me is that despite so-called fast-moving consumer goods companies are actually slow-moving. Why am I saying so? If you look at this data for last 11 years, only 2 years, the FMCG companies grew faster than the nominal GDP. Are you getting my point? Here, 2015, 16, 17, 18 has been almost same, 9, so I'm not going to discuss about it. 19, 6, and look at the difference between them. Actually, it's a huge difference. And hence, I personally believe fast moving is no longer a fast moving. In fact, it is a slow moving. Then why should we call them a fast moving? And this is the kind of a trend, just for the information about the net profit growth in the FMCG companies. One of the reasons why FMCG companies have not been able to create a lot of wealth, barring some of the companies like ITs and so on and so forth. I think one of the reasons, and you must, Colgate, I distinctly recollect, previously people used to say those who are in the market for 90s and so forth, they would say Colgate you buy every year, every 2 years you will get bonus, and it's a wealth creating story. And last many years, Colgate has been struggling to grow. So this has been net profit growth and nothing spectacular to talk about in terms of FMCG net profit growth. So this, I thought, just a data, whether should we call FMCG or should we call it SMCG, slow moving consumer goods. And of course the competition is increasing. Now one pain point which every IT company discuss about in the con call, whether it's for TCS, Infosys, Wipro and so on and so forth, I distinctly recollect, there was one article which got published somewhere 6 or 8, 9 months back. Just to retain the employee, they were giving BMW bike, IT employees. Why? Because by the time you offer the IT employees an offer, he said, no, but my existing company is now basically matching the same. Can you pay me more? And okay, this company say, okay, I'm willing to pay you more. Again, he'll go back to the old employee, the existing employee, and say, no, anyway, I got my better offer. Can you match it or not? And that kind of creation created a lot of havoc for the IT companies. And what has happened is that it has fallen for the March quarter. Whether it's for TCS, each and every company, if you look at where I put it in green, but yet it continues to remain much higher than what it used to be there, even if I have to go back to maybe September 2021. So it has come down, the trend has coming down. but it's still a lot of work needs to be done at least. And my sense is that if I have to make again presentation in May 2024, there is a very high probability that they would be very similar to the number that we are seeing in September 2021 or December 2021. So that's what's going to happen. But the trend is becoming more and more, at least it has started coming down, but not yet come down to the level of September 2001 or June 2021. With this, let me say what is the positive trend. And we all know that Go Alcon went bust despite the industry is doing extremely well. And many times I've said that not necessarily that the industry may do very well, but the companies may not do very well. And this is the growth in domestic airline passengers. I'm happy to inform you that we are at pre-COVID level. So I've put numbers, in January 2020, 2.48 crore domestic passenger traveled. And if you look at in January 2023, 2.5 crore people domestic passenger travel. I'm talking only domestic, don't get confused with the international. And in February 2020, it was 2.4 crore, it was very similar. And for March, I have not compared of March 2020 because COVID hit us and hence the number was much lower. I don't want to. So what is clearly showing right now that domestic passenger, the people are started using, again, it's gone back to the pre-COVID level. Business activities have increased, people have started traveling for various business activity and so on and so forth. And it has gone. Like there was a fear some time back that business travel may not come back because of likes of Zoom and Microsoft Teams. People instead of traveling, they would prefer to do meetings. But somewhere the data suggests that people are doing it. Of course, this also include leisure travel also. But anyway, I think the overall picture looks very, very promising. We need to wait and watch whether this trend sustain or not, how much euphoria of that revenge travel continues because the airfare have gone up dramatically high. Will the higher price impact the demand or not? We need to wait and watch. But today, we have crossed pre-COVID level of domestic airline passenger. So that's a positive trend. But the negative trend is as usual, the number of active clients in India have continued to reduce, which was near about 3.72 crore somewhere in April 2022, which has come down to 3.12 crore. So it's gradually declining, and the reason is very simple. A lot of investors post 2000 COVID crisis came to the market and they saw handsome returns coming to the portfolio. They continue to believe this kind of trend will continue year after year. When the returns started become little more sobering and kind of a stuff, they got little dejected and they stopped buying and selling, and that's really impacted the numbers. But my sense is that if the sentiment revives, sorry, if the sentiment revives, I think this number will further go up, and I'm very confident the number of active retail investors will go at least double in next 5 years or so, purely because if you have a 60 crore or 61 crore kind of a PAN account holders, you can imagine they are gradually, they need to move to the equity market. With this, what are the major news? Forex reserve has gone high. That's very good. Retail inflation continued to come down. That's a very, very good. And if you remember, the WPI inflation was negative. So that's another good thing. India's merchandise export did come down, and for the full year, India exports are going to be only into 11 to 13%. That's a prediction for FY 2024 as compared to 14% increase in FY 2023, purely because of the global economy is going to face a lot of headwinds, and that's what's going to happen. FII continues to be loving Indian equity market. I think it's a record that consecutive positive inflow in the equity market. It's a record of many, many years now. There have been every day we are seeing positive inflows coming in from the Indian. That's another major news. And there are two major news is that FII, and second thing is that Nifty and Sensex moved in a very, very narrow range for the week. With this, let's not waste time. Let's open the floor for question answer. Over to you, Jason.
Okay, starting off with this first question, couple of investors have written this. This one by Nayan Shah. Want to know if the downtrend in the market has just started.
Downtrend in the market?
Has just started.
So when you say downtrend, that means it's going to sustain for a longer period of time. So we have predicted, and we do believe that market is going to remain volatile purely because of the global events purely because of there is a little less clarity in terms of what's going to happen on the monsoon as we speak, and that's going to. And if you look at the projections after projections, I think people have been lowering the GDP growth, not only for world, even for the India. If you look at the exports prediction that is there, that's also a little lower than what we did in FY 2023. Am I right? And there is a high probability that number will further can be revised downward. That's what my sense as we speak. So my sense is that there is no downward trend. We do expect market to remain volatile, yes, but we do expect that by December 2023, Nifty should be in the region of about 20,100 or so, and we continue to maintain that our prediction of 20,100. So yes, there could be volatility. When I say volatility, it doesn't mean it's a continuous down. Volatility means up, down, up, down, up, down. And that's going to happen at least for next couple of months.
Okay, this next question by Nishant. Hi sir, I've kept most of my savings in the model portfolio. With the disclaimers in the webinar and website, I'm not really sure if MarketsMojo is my financial advisor or not. I have taken paid subscription considering it is. Could you please clarify?
No, the disclaimers are always to warn you because, today even if you buy a mutual fund, there is a disclaimer that it's a healthy practice to say that the past performance doesn't mirror the future performance. So these are disclaimers that would always tell you that, if there is anything and if you need to take advice, you need to take relevant advice out there. So there is nothing wrong with the disclaimers. These are standard disclaimers that we have obligation to give it to you, and it only safeguards the interest of the investors as well as the firm. That you need to take decisions with full cognizance that this is a risky asset class. This asset class essentially doesn't move as per the past performance, and the future performance can differ out there. So these are things that are very standard in nature and very also informative for clients to understand that what is the risk of investing in equity markets. So I would say that we are making you aware through a disclaimer what you already should know. So there is no issue with that, and you should continue to run your model portfolio out there. There's nothing to worry about there.
Some news, I don't know whether this news is right or not, but I got that 2,000 rupees note will not be a legal tender after September 2023.
Yeah, that's the next
maybe
question.
We are having a new demonetization kind of a stuff. I don't know. This is just a flashing on my this one. I don't know whether it's right or not. So please check your sources.
Yeah, but yes, Mr. Sunil, a lot of investors have actually asked that question. Is there going to be any impact on the economy due to this?
Sir, see, I think it's another way to curb the black money. We have seen that impacting when it happened last time when 500 rupees and 1,000 rupee note were demonetized. We did see some impact. It also put a lot of hardship. But fortunately, बहुत कम लोग के पास 2,000 का नोट होगा. मेरे पास भी होगा थोड़ा बहुत. I'm not saying नहीं होगा. But it's not going to be too much with me also. So yes, there will be some impact, but I don't think that's going to be a major this one. And the fact is that they are going to say that September. So I think they've given enough window. If you remember last time, it was announced at 8 in the morning, 8 in the night, and they said only 1 month or so when you can go to the bank and you can exchange it. Am I right? So yeah, so I think they've given enough time. So there will not be much of a discrepancy. That's my personal. Mohit, what is your opinion?
No, I think it's a good enough time for people to manage their situations. I don't think so. It is going to be a discomfort, and I think the government is keeping us all busy with new things happening on a daily basis. For example, I don't know how many of you send some money outside, but I send money for my children outside of India, and they suddenly introduced a 20% TCS on foreign remittances, which basically means that I don't understand the reason why, because I'm a tax-paying customer and I get my salary post-tax, and why should I hold 20%, which used to be 5%, has gone up to 20%. So, and that parallelly increases everything, your whole cost calculation. Now, for example, yesterday what was announced was that your offshore, if you travel outside of India and you use your credit card, that also will, in your credit card itself, they will charge another 20%.
Some
and that will go
clarification has
into
come.
your.
Some clarification has come. I think they are giving some just one. So
I have no clue. So and that will go. It will go from your LRS limit. So.
But I think they've given some limit, 7 lakhs or something.
So
that
there I think there is a lot of buckling down that is happening to try and organize the whole place, but it comes at the pain of the organized guys. So that always happens. So these things are everybody adapts to the whole situation very fast. So and if this news is right, which we don't know, and this is something that we've just told you, but if this happens. And I think by September is a good enough period for people to manage. People manage very well in a 1 month situation. So the only thing that may affect is the real estate, which is where the black money still goes in to some extent. But for people who invest in equity markets, for people who are consumers of goods and all this and services, I don't think so. There's a major impact.
Okay, moving on to this next question by Satish. What's your view on ITC's result?
The results are good, Satish. I think there are a couple of things which we believe will continue to play out with ITC. Number one is that if you look at the price to earning that ITC commands as compared to some of the FMCG companies, continues to remain very, very almost half of what other players are commanding. That's number one. And number two, we do believe that cigarette as a business has, and they have clear-cut advantage there. No new player is going to come in, and ITC continues to remain a market leader. So that's where they will continue to see their numbers improving. And number three, we do believe that one good story that can play out with ITC is a value unlocking through demerger of various businesses they have, whether it's a hotel business and others, so on and so forth. And if you remember, some time back, management did elucidate to that they may look at, to create wealth for the investor, they may look at some option like this. So my sense is that they will do somewhere, they have a very big FMCG business that's there, their hotel business is there, their paper business is there, and so on and so forth. So that could be another reason why it could they can do a value unlocking. So yes, we'll continue to remain bullish on ITC.
Okay, moving on to this next question. This is actually a request by Payal. When can we see the portfolio analysis section for the Infinity portfolios? Please advise a time frame for this, as it's an essential feature like I miss in the personal portfolio.
Yeah, the analysis portfolio, we've, Payal, there has been a dichotomy in my thought process. The reason is that the analysis, what we give for personal portfolios is for you to improve your personal portfolios. Now, Infinity portfolios are typically managed by us. They are advised to you by Infinity under the, RIA agreement. So we would like you to follow, and if you look at analysis, it may just give you, some thoughts of not getting into a stock or getting out of a stock, which we are still telling you to hold on. So we didn't want to confuse the agenda. For us to implement that is very easy because you can always put that in there. But we do not want you to take undue actions that you may want to take on your personal portfolio. Hence, the difference in the personal portfolio and Infinity portfolio, you just don't have an analyzer, but you can also, look at what you can do to improve your personal portfolio. But the same feature we've not given in Infinity, primarily because we do not want you to act on that analyzer, right? Because it will, for example, if it will come as a 10 stock portfolio, it will say that it is a high risk portfolio. Obviously, it is a high risk portfolio because we have made that very clear in our correspondence with you. And when you look at on days when the market is down 1%, 2%, you will say, oh my God, am I taking high risk? But it can change sentiments on a day-to-day basis. That's the reason we have not given. But if that is a popular choice, we don't have a problem giving. That is not it is not a bandwidth consumption for us to not give you that. It was more for the interest of the investors that too much of analysis, if we give them on a portfolio that you are not managing, I'm managing for you, then I don't want you to take undue actions on it. But please put in a comment if you still want it, because I can tell you that we may think that we have our emotions in control, but over a period of time we've seen that unless somebody else is deciding for you, emotions can vary a lot on a day-to-day basis.
So let me just reconfirm, yes, this news is correct. The 2,000 rupee note will come to an end from circulation from September 2023. So that's a confirm.
Okay, this next question asked by Mr. Mohammed. What's your view on small cap stocks now?
Mohammed, we continue to believe that small caps should do very well in 2023. We had maintained that in beginning of 2023, purely because of, so, see, if you look at the human psychology, in 2022, small cap did not do well, mid cap did not do well, Nasdaq did not do well. Why that was the case? Purely because of there was a risk off strategy. So when the rate of interest start moving up, people prefer to move towards the large cap because their ability to withstand the interest rate shock is much better as compared to mid and small cap. So there was a risk of strategy in the market. The risk on strategy is coming back in the market. You look at how the Nasdaq has performed in 2023. And when the risk on strategy comes back, the mid and small cap does extremely well. And we do believe that in 2023, risk on strategy will play out. If you remember in 2022, beginning of 2022, we did mention that this is not the year for the growth strategy. This is the year for the value strategy. And that's exactly what played out in 2022. If you happen to remember what I said on 1st January 2023, we did mention that this is a year for the growth strategy. This is not the year for the value strategy. And I think once market gets sure of that, yes, this rate of interest are not going to go up and is going to go down, I think it will further create interest in the mid and small cap space. So we do believe that mid and small cap should do extremely well in 2023. If I'm not making mistake, even in 2023, I think mid and small cap would have done. So yes, mid and small cap have done well even in 2023. So just for information, mid cap index is up by 3.31% in 2023 versus Sensex, which is up by 1.46 and Nifty up by 0.54. While the small cap index is up by 2.84%. And we do believe this gap further widening in the rest of 2023. So we do believe that second half of 2023 should be extremely good for the market, purely because of we will get some clarity about rate of interest, we will get some clarity about inflation, and we'll also have much clarity about how the monsoon is going to play out, and that should really spur growth in the mid and small cap.
Okay, SP Singh has asked this particular question. He says, if I buy and exit Mojo stocks as per your advice, then what's the use of a model portfolio or any other portfolio? I should be in profit always. Occasionally prediction for some stocks may go wrong, but normally I should be in a high profit range. If I'm right, then what's the use of any webinars as well?
Mr. Singh, there is no use of anything. The only thing that you need to understand is that Mojo stock is a list of stocks which goes very wide. You can have, I think today we have over 50 Mojo stocks out there. You cannot buy each and every stock and keep, churning it around. And a model portfolio is a much more long-term instrument. It's a much more fundamentally strong instrument because you take concentrated bets. You take concentrated bets, but you do not violate the whole phenomena of going overweight on a certain stock or on a certain sector, because there are sector restrictions that are built in, which single stock holding restrictions that are built in. So it's a much more disciplined, good to sleep with an approach because and it is managed by, it is advised by MarketsMojo. Mojo stock is absolutely, you're right. Mojo stock is an instrument with which you have the top stocks directly in front of you. But within those 50 stocks or whatever, 10 stocks are chosen for, say, a more model portfolio. So it is an added effort depending on your profile, whether you're aggressive, moderate, conservative. You can choose a model portfolio approach. But if you personally feel that Mojo stocks work for you, then that is fine, because that is the list of the top stocks, and the gravy is the same. It is just that we cook it for you or you cook it yourself. That is all that matters out there. Moving in and out of the market also sometimes, and having a 50 stock portfolio, we've seen it kind of cuts out things. There are disciplines of loss booking, profit booking that are built in the model portfolio, which is something that you may want to follow yourself or may not want to follow yourself on a Mojo stock. So there are various other instruments that or tools that we've built within the model portfolio, which help you have a consistency of return with a limited number of stocks. And I think personally, over long-term period, if I were to make a 50 stock Mojo portfolio and a 10 stock model portfolio and compare that, I am 100% sure that the model portfolio will beat Mojo stocks hollow, primarily because of the breadth of the stocks that are there. Because my allocation becomes very diluted on a 50-60 stock approach, and all the other factors that are built in of loss booking, of profit booking, they are not available out there. It's with your whole thing, because we will keep holding a Mojo stock till the time it is a Mojo stock. So those are some of the factors. Coming to your second question, webinar is more a knowledge series. Webinar, we are not going and telling you about what to buy, what to sell, and all of that stuff. That is not the objective of this. The objective of coming in front of you almost on a daily basis is to make sure that you have a sounding board. Sometimes when we go through our own set of emotions, we may make stories in our mind. The webinar is basically something that clears the mist in front of you of things that we are seeing and we are showing you, which tells you clearly that, okay, expect some volatility, for example. So, expect a certain return, or the market can go up or go down, right? Those are kind of knowledge things so that you can build your own strategy if you want to build your own strategy. And it is not something that is an essential item for you to join. It is a service that we are giving. We don't charge anything for the service, for the webinar service. And, the click button is in your hand.
It's just to enhance your knowledge on the sector, on the economy, on the company. That's it. That's the objective of a webinar. Yeah.
Okay, this next question by Shubham. Hi, sir, I'm just 25 years old and I have some savings which I'll be needing after 1 year. Should I invest this amount in the market or keep it in, let's say, an FD? I'll be grateful to have your insights on this.
Shubham, never invest something that is available for 1 year in equity markets. That is not, if you have a minimum of a 3 and a 5 year horizon, then only you get in. Equity markets are very lucrative. They are very addictive. They will lure you, grapevine news, tips from friends and, family members will always tell you to do that. But I can tell you that 1 year is too short a period for you to look at equity markets. 3 to 5 years is the minimum that you need to look at. So if you have availability of 3 to 5 years, or whatever small amount you want to start with, start. But 1 year is definitely not the period.
Okay, couple of investors have asked this particular question. This one by Govind Swami. Dear Dr. Mohit, can you help us understand when we're going to start the PMS?
PMS, as I said, should be going live towards, I think, mid of June is when our anticipation of PMS going live is. We will be coming and doing a full disclosure and full presentation to you in terms of what the two schemes will remain the same, which is the soul and power. We may come out with a third scheme, but maybe later. But we will go live with the power and the soul. There would be a certain modification in our strategy that we would be doing. I will disclose those modifications and the fee structures and how the whole process will follow. We are also trying to make sure that we appoint an agency so that you don't have to take the trouble of going through the forms, the PMS forms, and also that somebody comes to you for all the sign-offs at your doorstep and you sign it in the comfort of your home rather than move out anywhere. So we are organizing all of that so that there is a seamless process. But before we start the PMS, I think a week or 2 weeks before that, we will disclose the full strategy to you.
Okay, this next question by Mohit. Recently, Zomato has narrowed losses. Is this the start of a turnaround?
So I think Swiggy came out with a statement yesterday that the food delivery business has turned around. So Mohit may have a different view and I may have a different view. My belief is that Zomato does not have a moat in terms of the business sustainability. And why am I saying so? Because we all know that ONDC has already launched it. And of course, it's the initial stage. It does not pose any threat, but it will eventually. Number one. Number two, in our Infinity webinar, we discussed that at least in Bombay, there is one app which has come up, which has been started by Ahar. That's an association of the restaurant in Mumbai. They have launched their own app, and they are going to basically deliver food through that app, and that's going to create some amount of a business disruption for players like Zomato. So I think Zomato, will they outperform going forward? The answer is no. This question was asked when Zomato came out with an IPO, and I said on TV channel, and one of the other panelists on the TV channel was extremely bullish, and I said, I don't see this company making money for the investors for the very simple. Of course, listing and I never talk about, but if you look at the business, see, ultimately we need to all understand the business, that company, and is that business can be replicated by someone else, and how, if yes, how easily is that can be replicated, and what is the kind of moat that you enjoy, so that no one come and basically break your wall of safety. And in Zomato, I don't think anything else basically. So today it has happened in Bombay, tomorrow it can happen with NCR region, and so on and so forth. So that's where, and ultimately it doesn't matter to you as a customer whether you are ordering that food from Zomato, or you are ordering from food from ONDC, or you are ordering food from XYZ. Ultimately you need a food in the given time, and I believe that's going to be a creative problem. So my sense is that it doesn't have a long term, it is going to keep bleeding even moving forward. Mohit, your view?
Yeah, I think I can foresee the bleed for some more time. I personally believe that Zomato has, I have a little different view. But I personally believe that Zomato has a better model than Swiggy in terms of its reach and in terms of the new features that they're adding. But I think it is a little far off from becoming profitable, and I personally feel that I would wait for some more time and observe it till the time that turnaround comes.
Okay, this question by Ajay. Hello Sunilji, though the active number of investors is coming down, what is the total value of trades happening in the market? Is the investor average trading or investing amount increasing or decreasing?
That's a good trend. We will present it next Friday. Jason, just remind me. I think on an average on the cash segment is near about 50,000 crore on NSE. I don't have a data. I can't recollect right now on the derivatives market. Mohit, do you have any idea? Maybe it's 5 times more than cash market, am I right?
More than that.
More than that? More than that would be. So, but 50,000 crore is, so it has come down. Let me tell you very fast. At least in cash segment, it has come down. It used to be near about 75,000 crore, which has come down to near about 50,000 crore. But it's a good data point. We will definitely present that in our next Friday webinar.
Okay, next question, Mr. Sunil. US recession fears, will this have any implication on us? So,
again, my personal view, I see only 60% probability that US will have a soft landing. 40% probability is definitely there of a hard landing. So, even for some reason, if there is a recession in the US, I do believe it is not going to be for a more sustainable period. So, I think it will be for a very brief period, and hence any impact on us, yes, to some extent. See, if you look at the export prediction, that is that little lower at this as this year as compared to last year, purely because of the US market. In fact, I was reading to the Walmart commentary. They declined the numbers. They have accounting year Feb to April, and they came out with. They have been very optimistic about this growth that can happen in Walmart. So that gives an indication that people are still doing shopping. They are still spending money. But will there be a recession? 40% probability, 60% I do believe there will not be a recession. If at all there is a recession, it will be for a very brief period. Yes, there will be an impact on us, but very minimal. I don't think it's going to create an havoc for the country like India. Mohit, anyway, Mohit was recently went to US. So Mohit, maybe if you can give some ground reality.
No, I don't see much signs of recessionary pressure out there. I think broadly on ground it doesn't look like it is there. And I personally also feel that I think Fed cutting the interest rate, the first cut of Fed interest rate will be a big, or should be ideally speaking, a big U-turn in the US markets. And I also feel that that is not far off. Because, the way the banks are suffering, the way the whole economy is suffering, at a certain stage, that's the way, India decided to not increase the interest rates. And, we may decide to start cutting down the interest rates. I think that is not very far off. Maybe, another quarter, I would say, or somewhere there. And I think that would be a big booster to the US markets. The this whole the thing that happens is that all these numbers are very moving numbers, and they're like analysis sometimes becomes paralysis. Yeah, because fundamentally global GDP is predicted to be at this much, Indian GDP is this much. Suddenly the numbers change, and you say that okay, now the GDP is this much, and all this. All these are very moving numbers. So they don't tell you a story. The only story that comes out is that there are certain factors which become very key factors in a certain state of market. So today inflation is a very key factor. Today, interest rates are very key because those are the main drivers of the volatility in the market. Even if you look at the bank collapsings that has happened in the US, it is related to, so everything that happens will at any given point in time happens around one or two factors. And if those one or two factors come in control sooner than later, then the story suddenly changes, and I won't be surprised if everybody increases the GDP forecast and all the story comes around. So, and that is something in my life I have seen over years now, that like an analyst or a research guy coming and changing calls in the whole economy as well as on the stock, overnight suddenly my mood has changed or something has happened and all that stuff. So all of those things are very in the point, in the moment kind of a thing. So the only good thing is that you need to maintain your sanity in that moment. You need to say that, okay, there are certain factors which are not looking good. There are certain factors which are looking good. These certain factors may play out, may not play out. But ultimately it is certain factors only. Today we may do bingo of data with you. ऐसे दिखाएंगे, ऐसे दिखाएंगे, ऐसे करके दिखाएंगे. But base reality remains the same. That the first cut of interest rates by RBI, by Fed, will give the amount of confidence that even the 3 increases may not have given or 4 increases may not have given. That confidence is required. Once that confidence comes back in the economy, a lot of things start moving. Although the underlying state of the economy remains the same, but a lot of positiveness comes into the market and a lot of things start moving out there. So I don't think that US is heading towards a certified recession as per the definition of recession. Yeah, there is a slowdown which is already there. And I think that there are certain factors which have to start looking up, and it is a giant that can just move in one direction very easily. It is not a ship that has to take a lot of turns and all. It is a very, very innovation driven, very fast, very intelligent market, very large pocket, very deep pocket market for it to turn it around. And I think I don't see a chance of a lingering recession in the US markets.
Okay, this question by Mr. Imtiaz. Dear Mohit, can my Sharia compliant investment also be taken care in the PMS?
I will need to check if we can put the Sharia compliant as a grey list in the PMS category. Jason, if you can remind me to check internally if we can make a grey list of the Sharia compliant stocks.
So we spoke internally, Mohit.
Yeah.
And maybe what you can do, you can give us you can send us which are the sectors you would like to avoid in the PMS. We can do that, sir. So if you said you don't want to get invested in banks and NBFCs, maybe we can put that in a negative list. If you said you don't want to get invested in a tobacco and the liquor company, we can do that. So, but that list has to come from you, sir. So we can put that sector itself as a part of that, but it's possible.
No, I see that becomes very difficult for the investor, Sunil, because it is not just at a sector level. Then it is also at a debt level. So it is also at a non-operating income level. If you're earning more interest income, then so there are various factors internally built in the Sharia calculation.
Okay.
So what we'll need to do is maybe internally talk to the ops head and say that let's talk to a Sharia board and see that if they can give us a revised list of stocks and then keep putting it in, because for Mr. Imtiaz it will become very difficult to just give sectors, and once you give sectors you're out. The whole sector, everything is out. There may be certain sectors which are fine, but certain companies under that which are not fine. Then, so all of those things, I think a Sharia board has to give.
Okay.
So we'll have to, Mr. Imtiaz, we'll have to check this out. Jason, please make a note and please take Mr. Imtiaz's email ID and just remind me to check back and write to him next week.
Sure, I'll make a note of the same. This next particular suggestion by Mr. K. Good evening. Can you please have a trading view or a chart IQ integration so that we don't have to go out of MarketsMojo to do some technical analysis? This will help in having it much more convenient. I know MarketsMojo has technical analysis section, but I'm looking for something more.
Yeah, so you're looking at the chart making software. We never integrated that because we thought that there are 200 other softwares that are available on chart making and chart intelligence. It was not a USP or a IP that we can create around that. So it is. That's why Mr. K, it's not been on our priority list. But point taken. But frankly, trading charts and all has not been our focus because we are fundamentally players for fundamental picks. But it is a product suggestion. Let me raise this up with the product head.
Okay, this next question by Mr. Seth. Can Chola Finance or Shriram Finance be the next Bajaj Finance?
Sir, so I distinctly recollect in my previous organization, we were having a board meeting and the question was asked to me, can we find out what would be the next Infosys, and one of the board members at that point of time had his own view and he said Suzlon could be the next Infosys in terms of the wealth creation. And then, at that time the Suzlon was really the darling of the investors. So there cannot be no next Bajaj Finance, let me put it this way. So what I'm trying to say is that every company, so Chola has been backed by very strong promoters. In fact, the kind of pedigree, and in fact, we do have some of our customers in Mojo Infinity from South, and whenever I've spoken to them, they have given a very, very high regards for the Chola as a group, and I think this group has survived, thrived, and I think it's a very good company to. The group it can create a lot of wealth. Can it create as much as wealth that Bajaj Finance created in last 10 years? I don't want to go into that speculation, but yes, it's a very good group to have. Shriram Finance, I'm not very sure, sir, to be very frank with you. I think it's a good group, but somewhere they are not as aggressive that one would have loved them to be actually. So I'm not very sure about Shriram, but definitely Chola has a better prospect as compared to Shriram to create wealth, if not as good as what Bajaj did it, but it can come very closer to that.
See, I think I was with the Shriram group a couple of days back.
Oh, okay.
And I was seeing their businesses from different directions of what they're trying to do. And everybody is very conscious. These are promoter-run companies that are becoming very conscious of how professional setup should be run. So Bajaj Finance, the biggest win of Bajaj Finance was the shift from being a promoter-driven company to professionally run companies. That was the main shift. Use of technology, use of focus of activities that you're doing, making sure that you have the right cross-sell, making sure that, because their base is huge. Base was huge. Like, to just give you an example, when I met the credit head of Shriram, he was telling me that they're doing on an average of around 1.5 to 2 lakh auto loans on a monthly basis.
Oh.
The number is increasing and predominantly south-based, right? So if they have technology interventions coming in, if they have the right approach of going in, the scale can be very big, because this two-wheeler financing business, the credit business has got a huge amount of appetite in the country. It's ultimately it's got a market cap of close to 50,000 crores. So these are large groups. So if they get the act right, I mean, Chola is already getting the act right, and I'm sure Shriram will also get the act right. These can be very well-run companies, but how far they will go, whether they'll become Bajaj Finance, not Bajaj Finance, I think that is not comparable at this point in time. But I think as far as the prospect goes on the credit side of the industry, that is a high prospect game, because their reach, their brands are strong brands. The only unfortunate thing is they're very regional in nature. If they can create national brands, the way Bajaj created, their integrations, I mean, today if you go to any of these appliances, goods and appliances store, you don't meet the sales guy first. You meet a Bajaj Finance guy first. Right? He says that whatever you want to buy, you buy free. In the sense at a 0% EMI. Right? So you meet the guy first, and he's roaming around you. So they have cracked that whole piece that if somebody comes, they will take a loan from us. So, and that bundling of the loans, various other things that they've cracked in business models is phenomenal. And it's a good, I personally feel that when Bajaj Finance has done something, can other guys do it? The answer is yes, because there are some best practices they have to pick up. How well they pick it up and how well they differentiate over a period of time is anybody's guess.
But I think if they copy what Bajaj did, I don't think that we're going to give a alpha, in the sense that you need to really think of something which Mohit was saying. What Bajaj Finance did, they look at the consumer credit, how you can be correct EMI. Someone should really think on that line, what could be the next growth opportunity that I can come and then create as well as what Bajaj Finance. Shriram Group had a lot of promises when Piramal took a stake in that company, and then Piramal eventually decided to move out because he also got a little frustrated. That's what I'm getting a sense. So even Piramal is making an exit. So when Piramal entered, I think there was a little hope that the Shriram Group will create and can create a lot of wealth, but somewhere that did not work out the way it should have worked out.
Yeah, it's just that what is interesting is that these are long relationships. When you give somebody a loan, a credit relationship is a long relationship with the client, right? It is not a short relationship. Your loans are being taken for 3 years, 5 years, 7 years, 10 years, and also long relationship. And your subsidiary businesses, your additional businesses can grow very well. Like, to give you an example, Shriram also has an AMC, right? The AUM of the AMC is just 300 crores. It is an older AMC than HDFC.
Achha.
Older than HDFC with just 300 crores. Now just imagine with this kind of a latent base, if they were to just start SIPs, for them to reach to a 30,000, 50,000 crores can be very, very simple and easy.
But the very fact that we are saying there's an AMC, in fact, I was not also aware.
Yeah, they have an AMC and it is one of the oldest AMCs. In fact, very funnily, I was talking to this gentleman who runs the AMC, and he actually went and he spoke to the clients, and their employees. And there was an employee survey that was done, that how many employees invest in their own AMC. Can you give me a number? 0.
Oh.
So you have that employee base, then you have this 1.5-2 lakh customers on a monthly basis. Then you have the customers that you've already acquired, and you have an AMC platform which has been there for the oldest AMC, older than HDFC AMC, right? And listed. So for them to then get into this whole cross-sell business, you always start with one business, you make it big, then you suddenly realize there are 4 businesses that can be done, and that Bajaj Finance did that brilliantly.
That's true.
So
I think Mohit gave an answer about Shriram. Can it become a Bajaj Finance or not?
No. I have very high regards for both the groups.
Okay, Mr. Mohan Sunil, that's it with the Q&A session for today.
Well, thanks a lot. Hope you have a good weekend. Markets are choppy. Markets will remain choppy. We will remain stable. We will remain steady. You don't need to, it's not as strong a wind as you believe that can shake you. So make sure that you are not, reading too much into the negativity of the markets. As I told you, it's all point in time. This point in time, historically, 27 years I have seen changes overnight. And it will change, and this will change overnight, and you will see this right in front of me with me. So make sure that your head is strong in these markets.
So I would request everyone, please do give your suggestion, what kind of trend analysis you would like us to present to you. Maybe we can do that based on the merit. Again, a brief disclaimer that this webinar was only for an education purpose, just to enhance your knowledge about the equity market, about the sector, about the macros, and about the companies. Please consult your financial advisor as and when you decide to buy and sell. Please note that equity market is all about non-linear returns. It does create a little higher amount of risk, and past performance is no indicator of a future returns. With this, over to you, Jason.
Yeah, thanks a lot everyone for attending today's event. I'll be guiding all the investors out with a walkthrough tomorrow at 7 p.m. on the features of MarketsMojo. We'll also send you all invites for the same. Goodbye and have a great weekend. Thank you so much.